Before we get started, I want to know if you'll do me a favor and help me with my goal. My goal is to soon get to 40,000 subscribers, and I think you can help get me there. Will you go ahead and check to ensure that you are subscribed to this channel, and will you share it with just one person? It could be a friend, a relative, a coworker. It doesn't matter. If you share it with one person, it helps the algorithm, and it will more than likely get me to my goal pretty quick. Now, let's get into the video. Hello, everybody. Welcome to the Trading with Ashley show. I am super excited about this particular video because it involves a trading term that I actually had trademarked, and it's about the skip call option. Now, many of you are aware or remember the video when I introduced the concept of the skip call option. It goes very well with the leaps call option. And so I'm going to save that for another video. I have something exciting to share with you about that. But most of the time when I talk about skips and leaps, it's all about buying skips and leaps. And believe me, they are very profitable. For instance, I have 10 $20 Palantir leaps call options that are now up over 900%, and they are worth over $100,000. Now, I just did a video the other day where I had shown you where I had purchased 20 leaps call options on the Qs. I did that on April the 7th when everything was so dire, and that's when I actually decided to go ahead and purchase those. Well, that was a little bit over a month ago, and now those same leaps are worth over $165,000, and they have almost increased by 100%. So that's the power of these instruments. But where are you going to get the money to buy these? That's where selling skips and selling leaps comes in as well. Now, most of you know the standard selling a put option typically will have that expire the week of, and it generates some great income for us, and that's my bread and butter. But there's times when it actually makes sense to sell a leaps put option and sell a skip option. Let's clarify the terms so you know what I'm talking about. A leaps option is an option, a put or a call. It can be bought or sold, and it is 12 months or more out in time for the expiration date. Now, the skip, that is a call or a put. It can be bought or sold, but it is only going out 3 to 9 months in time. And I use both of these to sell options, but only under a certain set of circumstances that I'm going to go over with you today. Now, I had a video recently where I was showing my daughter how to use volatility to increase your wealth. And one thing that I had done on that particular day, I had actually sold skip put options and on the Magnificent Seven and a couple of other key stocks, and they were going out to the September timeframe. Well, that day I had generated almost $10,000 in premium. But when you look at the amount of money that was being held for those trades, if I held them through to expiration, then that's tying up my money for a long time, and it waters down my return. So my goal all along was once those particular plays had gotten to the 50% profit level, I was hoping to be able to buy those back, and then that releases those funds for other plays. Well, I want you to know that the vast majority of those have blown past the 50% level, and I have started cashing all of those in. I did most of them today, in fact. So when you put it all together, I was able, of all of that premium I created, I was able to hold on in a very short time, just a couple of weeks, $3,500 worth of premium. Well, it took money to generate that. It took about $93,000. So when you look at the premium that I generated off of that amount of money, that equates to an annualized return of almost 90%. And basically what that means is if you were to take that same amount of money and continue to produce premium like this week after week, that's what you would realize as a return at the end of the year. So there's real power in these, and I wanted to explain the set of circumstances that you might want to consider instead of selling a traditional put. You might want to consider a skip or a leaps put with plans to cash it in early so that you can have incredible annualized returns. Basically, you're using the same amount of cash after you buy it back to then go and produce additional premium. And once you produce all this premium, then you'll have plenty of money to go buy the skips and the leaps when the time is right. I'm going to review with you the 4 scenarios where you may want to consider, instead of the traditional selling a put, looking at a skip or a leaps put option. The first one has to do with the time factor. Let's assume someone works full time so they don't have time to sit by their computer and watch these weekly trades, or maybe they are a full time trader and they just want extra time on vacation to not have to worry about trading, or they're going on a cruise and they don't have internet access. Then they can easily adapt any of the trades that I call out. Instead of doing a weekly trade, they can do a monthly trade or even further out. If you're selling a put option that's 3 to 12 months out, then you really do not have to babysit that trade, especially if you're getting a really good entry. And that leads me into point number 2. Once a stock has reached a critical level of support, that's when you may want to consider using the skip or the leaps sold put option. Well, why would you want to do that? Well, let me explain. So let's assume that it's a quality company and it's at the bottom of its Bollinger Band, or it's sitting on a critical level of support. It's oversold on the RSI, so maybe it's around 30 on the RSI. Then you can go with a much higher delta and usually be just fine, because one or two things will happen in that scenario. You'll be able to collect incredible premium for going closer to the money, or if you're put the shares, then you have a wonderful opportunity for that stock to appreciate and take you along with it for all the appreciation. So once a stock has pulled back to a critical level of support, really like most of the Mag 7 has done over the past few months, it was a perfect timing for us to go ahead and sell longer dated put options, because we got enhanced premium by going closer to the action. And now that all of those have moved up, we can go buy them back in short order. Third, it decreases your chance of early assignment. A big part of selling put options is time decay, and time decay actually works in your favor when you are the put seller. So someone that buys a put that's longer dated, they're less likely to even bother exercising with that early, because there's so much value left in it from a time factor. So it does decrease the chance of early assignment, meaning being assigned before the expiration date, and that puts a lot of traders at ease. And the fourth reason that you might want to consider doing this, let's assume that your strike price is breached, but maybe it's breached early on and it's within the first month or two, and maybe this is a 9-month long trade. Well, if it's breached that early in the life cycle, it not only decreases your chance of early assignment, but it also increases the chance that the stock is going to bounce off of a level of support and head back up. But let's assume you do get put the shares, okay? It's not the end of the world, because if you do get put the shares, there's a lot of opportunity for you to make considerable money. In fact, most of the trades that I called today in our community, they were trades that we were put the shares at a fair price, and we just had to sit and wait for the stock to start moving up. Well, today was the day and the stocks started soaring. So we got to take advantage of that, and we got to sell significant premium and enjoy stock appreciation if our stocks are called away, because we waited until it rose. So those are the reasons why you might want to consider these longer dated put options when you're selling puts. Now, for those of you that were keeping up with the video where I took you through all of that, today was a very profitable day. There's only a few of these that remain from just a few weeks ago. But if you want to watch the full video where I take you through my thought process and I fully explain why I did these particular trades, you can watch that video right here. Remember, if you're with me at Trading with Ashley, there is no trader left behind.